allow us to emphasize that achieving wealth without putting in the traditional grind is not easy. It often demands a substantial amount of effort, dedication, and the implementation of strategic financial maneuvers. However, as you progress along this path, you'll discover ways to harness your hard work and put your wealth creation on a self-sustaining trajectory. While it's undeniable that hard work is a non-negotiable factor, smart work can expedite your journey to financial prosperity. The more refined and informed your strategies, the swifter you'll attain your financial objectives. So, let's delve deeper into 10 comprehensive methods to set your wealth creation on cruise control. First and foremost, it is paramount to engrave unwavering dedication to hard work as your default mode. In this initial phase of the journey, there are no vacations, no days off until you can comfortably afford them. This is a pivotal distinction that separates those who achieve their goals and those who fall short. It lies in the choices made when faced with that internal default setting. Some individuals mistakenly believe that clocking in 40 hours of work per week is sufficient to secure their desired lifestyle. However, this is a fallacy, one that crumbles as soon as you make hard work your norm, your default state. What initially may seem like an insurmountable task gradually transforms into just another 12-hour workday. It's imperative to understand that the concept of autopilot doesn't imply a complete cessation of effort but rather signifies that your path is predetermined, and you commit to relentless pursuit until you reach your financial destination. One such method to achieve this is by automating your investments and consistently allocating a portion of your earnings towards your financial goals. Visualize this as paying your future self first. With each paycheck, automatically channel 30% towards your investments. This can be conveniently set up with your bank, providing a structured approach to securing your financial future. What's intriguing is how the human brain operates in enigmatic ways. Regardless of your current financial resources, whether you have $1,000 to last the month or merely $500, you'll adapt and make it work. If you find yourself in the lower or middle class in the US, your optimal investment avenues might revolve around your 401k or Roth IRA. Venturing beyond that, explore the world of stocks and consider building a diversified portfolio. Now, let's delve deeper into stock investments. Contemplate the idea of investing in the self-compounding S&P 500, for instance, the Vanguard S&P 500 Index. Unless you're particularly inclined to seek the thrill of picking individual stocks, steering towards self-compounding through compound interest remains one of the most underrated methods of wealth accumulation. Astonishingly, with just $10,000 at your disposal, you can break the generational cycle of poverty. Here's how it works. Invest $10,000 in the S&P 500 on the day your child is born and simply let it marinate. By the time your offspring reaches retirement age, that fund could have grown to an impressive sum exceeding $1 million. Replicate this for each of your children and grandchildren. No matter how tumultuous your current financial circumstances might be, if you steadfastly adhere to the principles of hard work, you can reach that coveted $10,000 milestone, invest it wisely, and then almost forget it. 65 years down the road, your progeny will thank you for securing their financial future. But that's not all. You can further augment your wealth by perpetually generating intellectual property that consistently produces income. This strategy involves accumulating licenses, trademarks, patents, or royalties. Imagine it as an ongoing investment in safeguarding your intellectual creations and then licensing them out each time someone else wishes to utilize your brainchild. The beauty of this method is that it ensures a continuous inflow of income at various stages of development. Furthermore, the realm of wealth creation extends beyond traditional investments and intellectual property. Consider diversifying your assets by exploring opportunities in businesses and the world of art. The ultimate objective here is to maximize the value of your portfolio before considering liquidation. Wealthy individuals often incline towards art investments because of their potential for appreciation over time. Traditional investments may often weather economic storms with fluctuating returns, but the value of fine art tends to rise steadily. In fact, this is one of the reasons why 95% of billionaires allocate a significant portion of their portfolios to art investments. If you're seeking to introduce a potentially risk-reducing element to your portfolio while simultaneously optimizing growth potential, consider the services of masterworks. The Masterworks platform relies on decades of data and experience to deliver consistent returns to its investors. However, it's essential to recognize that overseeing the day-to-day operations of your business as a CEO may not always be the most efficient approach. In fact, it could hinder your overall progress. It is often more advantageous to assume the role of a chairman or a member of the board. This elevated position empowers you to hire and fire the CEO of your company while keeping you actively engaged with the business but free from the operational stress. However, it's crucial to emphasize that this strategy is most effective when you've built a company from the ground up and need to scale it to multiple locations. At times, you may even consider selling the company once it reaches a certain level of success or bringing in a CEO to manage the daily operations. By having a CEO report to you, you maintain a level of engagement with the business while delegating the intensive responsibilities, which can significantly reduce stress levels and enhance the overall quality of life. Furthermore, dividends from your business ventures can further support your financial goals. But the journey doesn't end here. Use these dividends to bolster your financial future even more by acquiring cash-flowing properties. This critical strategy revolves around the notion that the money you earn should be allocated towards acquiring assets that generate more money, rather than solely for expenses or discretionary spending. When your business is thriving and profitable, divert a portion of those earnings to invest in rental properties. A key point to note here is to purchase these properties outright with no debt, which helps secure the money you've earned. Each rental property generates consistent monthly income that can cover your basic expenses and even more. The next step is to strive for at least one property acquisition each year. As you continue along this path, you'll gradually accumulate a portfolio of rental properties. The turning point typically arrives when you own around 10 to 12 properties. At this stage, your rental income becomes substantial enough to fund the purchase of additional properties. This essentially creates a self-sustaining wheel of wealth where you can eventually retire comfortably, as your rental income will consistently exceed your expenses. If you find the process of acquiring and managing properties to be labor-intensive, consider another avenue: investing in a real estate investment trust, REIT. These financial instruments allow you to invest in real estate without the intricacies of dealing directly with tenants, property management, or rent collection. It provides a more hands-off approach to real estate investing while delivering returns comparable to those of the stock market. REITs are renowned for their reliability, making them a secure option for those seeking to put their money to work without the complexities of direct property ownership. Now, let's shift our focus to the idea of hiring a wealth manager. A wealth manager is essentially a professional entrusted with the task of growing your money on your behalf. Typically, wealth managers require a minimum investment of around $250,000 before they'll consider taking you on as a client. Most individuals wait until they've amassed somewhere between $2 to $5 million in investable assets before exploring the services of a wealth manager. These professionals can come in various forms, including financial institutions, family offices, or dedicated wealth management firms. They typically charge a management fee, often around 1% of your total assets under management. By partnering with a wealth manager, you effectively delegate the responsibility of growing your wealth to experts who can provide a level of sophistication and expertise that can be challenging to attain individually. This approach allows you to focus on your strengths and endeavors, knowing that your financial future is in capable hands. And, last but certainly not least, we must underscore the importance of automating your learning to consistently enrich your intellectual horizons. Your wealth is intricately linked to your knowledge and ability to adapt in an ever-evolving world. Hence, it is imperative to make learning a daily habit. Imagine starting your day with a routine. You wake up, make your coffee, and while savoring that first sip, you embark on a journey of self-improvement. Whether it's through audiobooks, podcasts, voracious reading, or the use of specialized tools designed to expand your mental faculties, this daily ritual transforms into an essential investment in yourself. Think of it as your personal wealth therapy session, a commitment to lifelong learning. Now, let's address an essential truth. While we usually compile lists featuring 15 items, it's crucial to acknowledge that anyone promising wealth without any substantial work is selling you a pipe dream. Be cautious of such schemes, as they often thrive by profiting from your hard-earned money. There is no magical system or quick fix that will effortlessly propel you to riches. If there were a method to turn $1 into $2 repeatedly, one would simply continue running that money printing machine indefinitely. It's essential to remember that people will invariably attempt to sell you the dream, promising effortless wealth through various avenues such as Amazon FBA, private investing group memberships, or even YouTube channels. However, it's vital to scrutinize such propositions skeptically. The reality is that the only genuinely valuable asset in your pursuit of wealth is deep education, knowledge that empowers you to make progress independently. All the strategies mentioned in this comprehensive guide ultimately hinge on your ability to become someone genuinely worthy of wealth, someone who can monetize their unique skills, talents, and insights. Wealth on autopilot implies that you've already accumulated sufficient wealth to generate returns that surpass your expenses, effectively providing financial freedom and security. It's critical to recognize that the path to wealth entails taking calculated risks with limited resources initially and then minimizing risks with substantial wealth as you progress. Ultimately, the goal is to reach the "stay rich" phase. You see, getting rich involves taking substantial risks with relatively meager capital, while staying rich involves taking minimal risks with a substantial sum of money. The journey can be likened to a marathon, and the finish line isn't a single event. Instead, it's a continuum where you persistently strive to improve your financial position. It's crucial to internalize the notion that there is no definitive end or magic formula. The phone won't miraculously ring one day with someone telling you that you've made it. There is no endpoint to this journey because no one else is keeping track of your progress. Wealth building will never be fully automatic or effortless, as nothing of genuine value comes easily. You're essentially engaged in a lifelong race, and the only way to escape it is to stop running. However, the journey is far more than just about accumulating wealth. It's a journey of personal growth, self-discovery, and ultimately, it's about finding purpose in your work. Once you come to terms with the inevitability of hard work in your pursuit of wealth, you can shift your focus towards optimizing and making the most out of the experience. We earnestly hope that you will eventually come to realize this fundamental truth. Wealth is a product of diligence, discipline, and dedication. If you are looking for ways to make more money, I recommend you watch this video next. Do not hesitate to share this video with friends, subscribe to the channel, and share your thoughts on today's video. Thanks for watching, and I'll see you in the next one.